Okay, good. Can you see my screen?
Yes, we can.
Okay, so welcome to everyone this evening. Um, like Jasper said, we had a quick chat during this last week, and we quickly also just discussed what is going on in Bitcoin and the whole situation with MTI and just a whole lot of things that went wrong the past 2 weeks. And so we thought maybe it's wise just to have a quick discussion this evening. As the Sunday sessions are short, this won't be in depth. I also don't make myself out being an expert in cryptocurrency, so I'm going to look at it more from a sound money and an investment viewpoint. And I'm just going to share some thoughts this evening. Uh, I wasn't really sure about what the title should be. I know Jasper marketed as cryptocurrencies as an investment option. I also had in mind maybe something like cryptocurrencies versus gold. There's a number of titles I had in mind. So I'm going to speak very broadly this evening and just leave some information with you, and hopefully this will be helpful to you. Okay, just see. I'm just here on a strange computer, so let's go for it. So just an overview. I'm going to look at cryptocurrencies in general, and then Bitcoin specifically. And then just have a discussion around, should I buy Bitcoin, a few good to know items, and then quickly chat about gold. Okay, so as of today, there are 8,222 cryptocurrencies. So there are a huge amount of cryptocurrencies. So these are basically private currencies built, most of them on blockchain technology. So blockchain is more than just currencies. I personally believe that most cryptocurrencies in the next 3 to 5 years won't exist anymore. But blockchain as a technology, I think, is going to become very important in just about every aspect of our life. So things like voting, record keeping of title deeds, keeping governments accountable with how they use finances. I believe that blockchain is going to be used for all of that, and it's a very exciting technology, and it's really going to become important. If we look at where the world is currently in terms of politics, economics, socially, there's a very strong move to the left towards socialism and state intervention. But I think one is going to see a counter movement that will start to happen as people want to break free from centralization. So blockchain does exactly that. It decentralizes things. So services like, if we take Amazon, Google, Facebook, Airbnb, Uber, they all try to centralize data. And it is a bit a Marxist type of philosophy that they are built on, because they want to use that data to control things. And blockchain will actually make all of those things irrelevant. Mark my words today, we look at Google and we think this company is going to be there forever. That is not the case. Blockchain is actually going to make irrelevant all these centralized type of data services. Okay, so blockchain, I'm very excited about blockchain for the future. Cryptocurrencies, less so. Money is the one domain that governments and central banks, they don't easily let go of the power, the control they have over money. So I'm going to look at why I make these statements, that I actually believe most cryptocurrencies in the short to medium term are actually not going to make it. One thing that cryptocurrencies have done uh, the past few years was to help people become educated about the financial system and how it operates. And I think initially, a lot of the people that bought into cryptocurrencies were drawn into it because of obtaining an understanding of how the financial system works and that it's over indebted. You know, quantitative easing is impoverishing everyone slowly. Um, but these days, I think in the current, and I'm going to call it a mania that we have with Bitcoin, it's mostly speculators that are getting on board. So I also want to differentiate between Bitcoin and other cryptocurrencies. So Bitcoin specifically, it tries to mimic gold. If you look at even the symbol of Bitcoin, you know, the B with the two stripes through it, it's usually in gold. So gold has got a mythic or a symbolic thing with humankind. You know, even the banks, you know, if they issue you a gold credit card that is superior to a silver credit card, so they know that, you know, in our subconscious, gold speaks of something of value and stability, and that's been the case the past 5,000 years. Okay, so Bitcoin, let's just drill down into some specifics. I'm not going to go into huge detail, but basically, there will only be a maximum of 21 million Bitcoins that will ever be mined. And it's projected by around about 2040, the year 2040, the last Bitcoin will be mined. So once again, it's Bitcoin is using terminology similar to what you would get in mining or gold mining, that there's a limited supply, but there is being added to the supply little bit by little bit over time. And this is how our gold works as well. You know, there's roughly between 180 to 190 million tons of gold above ground gold that's been mined, with about 3,400 tons being added each year. So that's about a ratio of 2% being added each year. So that's why I say Bitcoin, in a sense, tries to mimic how gold works, but it doesn't do it exactly the same. So Bitcoin is a highly deflationary asset. So what that means is it increases in value. Now, I need to say that anything scarce will appreciate in value. There are only so many Van Goghs or Picassos around, and because they're scarce, they appreciate in value. No further Picassos or Van Goghs will ever be added. A metal like rhodium is very scarce. At its peak, it was 13,800 US dollars an ounce. But the fact that something is scarce does not automatically make it money. So there are 10 requirements for something to become money. The main three ones are: it should be a unit of measurement, it should be a medium of exchange, and it should be a store of value. So with the first two requirements, unit of measurement, a medium of exchange, Bitcoin complies with that. But I must say, as a medium of exchange, I don't know who of you have bought things with Bitcoin, but I find it expensive and cumbersome. And if you try to run a business, let's say a business, a factory where you produce stuff and you use Bitcoin, go and do that calculation yourself. When you have something that is highly volatile, it becomes nearly impossible to run a business. So in terms of being a store of value, I don't think it is a good store of value because it's highly volatile. It increases in price very fast, but it also falls very fast. So Bitcoin, a lot of proponents say, Bitcoin specifically is going to replace our paper-based currencies. I don't think that is the case. I think that's a illusion. When you have a vested interest in Bitcoin, and I own some Bitcoin myself, but I think very few people, especially when they have large positions in Bitcoin, uh, they lose objectivity. It is not a good form of money, and it will never be, because it's too deflationary of an asset. There are other cryptocurrencies which I think are good as payment systems, store value. You have some stable coins that, for example, that are linked to gold. I think they would be better in terms of being classified as money. Okay, so leaving that there, the question is, should I buy Bitcoin? So those of you that have been following the price, I see recently, I think uh, past 2 or 3 days, it reached an all-time high of just over 42,000 US dollars. The last time I looked, it was just under 40,000 US dollars. So, the other day, it was still 20,000 US dollars a Bitcoin. I remember the first time I heard of Bitcoin was on what is that channel? Russia Today, I think. This English Russian channel, and Max Kaiser was speaking there. And at that stage, it was $1 a Bitcoin. So it has increased tremendously in price. And I personally know someone that's not connected with MTI or any one of these other schemes that has an unrealized profit of about 1.5 million rand. If he sold it today, he would have 1.5 million rand in profit on his Bitcoin. Okay, so this creates a dynamic of fear of missing out. And I think here one needs to be careful. And I want to make a disclaimer that I'm not giving investment advice. So anyone hearing this, I'm just giving my personal opinion here. So very important is that we need to differentiate between savings, investments, hedging, and speculation. So some people are buying into Bitcoin because they say, oh, this is a great investment. Other people again say, no, we need to hedge against all the money printing. And I think actually the correct motivation for buying Bitcoin needs to be speculation, not any one of the others. It's definitely not savings. So you accumulate savings so that you can make an investment. And an investment, it's quite easy to value based on a discounted cash flow method. There's a number of methods that you can use to evaluate investments. Bitcoin is not easy to value. And I also don't think it's a good hedging tool because it's highly volatile. So that leaves it in the area of speculation. I see recently one of the American banks project, one of the big banks, I can't remember if it was Goldman Sachs or JP Morgan, but they basically project Bitcoin will go up to 150,000 US dollars. So they might be correct. So that's about a little bit more than 5 times its current value. So I would just say be careful of this whole fear of missing out dynamic. There has been, and this is what you call a bubble, when you have this exponential growth. In the past, there has been speculative type of things that you could invest in that would have given you even a greater return than Bitcoin. In the 50s, there was a nickel mining company in Australia. I can't remember the name now, but they did a much bigger bubble than Bitcoin. So if you want to speculate, personally, I would not get into Bitcoin now. And I'll go into the reasons why I would not buy more. But speculations come and go. So there will always be opportunities to speculate. In the future, why do you speculate? A person would want to speculate to enhance your investment return. So I'm not going to do that weighted average calculation if you put 1% of your portfolio in speculative type of instruments, but there is a place for speculation, and upfront you really need to write off that money. And this is the problem with most people that speculate, is that they don't write off that money. If they lose it, then it's okay. So they go in with the wrong attitude, and also with a fear of missing out. And then basically greed sets in, and you make very illogical decisions in the process. So as speculation, yes, one can look at Bitcoin. Personally, I'm not interested at this stage. But what I would like to say is Bitcoin won't replace fiat currency. Central banks and governments want their control over taxes, the ability to do quantitative easing, which you will not be able to do with Bitcoin. And then every major central bank, including our own, has already developed central bank digital currency. So they will make use of the blockchain technology, but still allow themselves to do quantitative easing, or basically money printing, expand the money supply. So a few good to know things, just things I've, because I've sat with this Bitcoin argument, sometimes I'm in favor of it, thinking, yes, maybe it could replace fiat currency. And then sometimes I'm not convinced, but at the moment I'm not convinced. And it's becoming stronger and stronger the more research I'm doing. So I'm going to give you a few things to consider. The first concerns the on and offboarding into fiat currency. So what that means is, if you've got rands and now you want to buy Bitcoins, that's onboarding. And offboarding is if you now made a nice profit on your Bitcoin and you want to convert it back into rand. So that's the offboarding. Well, it's really easy for governments to make legislation. So some governments ban Bitcoin or cryptocurrencies outright, or you can do as Russia did. They say you can buy Bitcoin, you can hold it, and you can sell it, but you are not allowed to pay for any goods or services with it. And they've got hefty prison sentences if you get caught. So this is similar to like having 1 ton of gold or maybe $1 million, and you live alone on an island with no goods and services to buy with it. What benefit do you have if you can't on and offboard or offboard your Bitcoin into fiat? Another very concerning thing is what is known as whales in financial markets, so where you have ownership concentration. And this is probably the biggest issue I have with Bitcoin, and that is that you can see the graph on the right that around about 2% of Bitcoin users own 95% of the supply. So what you might have seen in the news the past month or so is a lot of big corporate investors, even some pension funds, buying big amounts of Bitcoin. And this gets into the media, and it creates a lot of hype, because now when a small retail investor like you and me sees that, we think, well, yes, if these guys are committing $100 million to Bitcoin, then maybe I should do it as well. So this is your typical pump and dump schemes. And I've seen this over weekends, especially on a Sunday evening like now, where some of these bigger whales, so owners, they won't dump their holdings all at once, but they will sell a sizable portion, and then you get a drop of $3,000-4,000 in minutes. Where Bitcoin then just falls as they as they start to take profits. Now, look, you can have whales in any market. You had this with silver in the early 80s with the Hunt brothers. Even Warren Buffett at one stage tried to corner the silver market. And yeah, he got wrapped over his fingers and he's never touched silver ever since. But this is a major problem. So when you have whales, they have an undue influence over the price of this instrument. So they push it up, but they can also dump it quickly, and then the price falls, and the small retail investor loses tremendously. Okay, another thing that's concerning, and I'm not going to go into the detail or try and explain this, but here's a problem in terms of the relationship between Bitcoin and a stable coin called USD Tether or Tether. I don't know exactly how you pronounce this name, but due to the volatility of cryptocurrencies, something developed that they call stable coins. So this is where you take a cryptocurrency and you link it to an underlying instrument. So there are cryptocurrencies linked to gold, which in theory is good. But when we speak later about counterparty risk, it doesn't make it a foolproof instrument. So in terms of USD, I'm just going to say Tether, that is one of those stable coins. So supposedly they are holding $1 for every USD Tether in circulation. So why would you do that? Why would you want to link a cryptocurrency to a fiat currency? Well, on the one hand, it's to reduce volatility, but then also for cross-border payments. So in countries like Argentina or Venezuela, Venezuela specifically, where dollars are, real US dollars are very scarce, you overcome this cross-border payments problem with a cryptocurrency. But in this case, supposedly stable cryptocurrency because it's linked to the US dollar. Now, many cryptocurrency exchanges, if you buy Bitcoin, you don't buy it directly with rands or dollars or pounds. You first buy USD tethers, and then with the tethers, Bitcoin is being bought. And the same with the offloading process. If you go and look at Tether, it's the third biggest in terms of market capitalization of cryptocurrencies, and it has the highest daily turnover. Only problem is Tether has never ever been audited. And last year, the attorneys basically said that only 74% they only have 74% actual US dollar reserves for tethers in circulation. So you can now just make a projection here. If regulators want to start regulating tether like any other currency, Bitcoin, and in fact the whole crypto space is going to have a big problem, and it's probably going to end up in a liquidity crisis that people can't get their Bitcoin sold, and there's zero liquidity, and the price is going to crash. To date, Tether has been tolerated by regulators. I have a theory about that. I could be wrong, I could be correct, but I think the reason they tolerate it is because I think that money, it's not in the interest of central banks that people buy gold, and they actually suppress the gold price with the gold paper market. So the gold paper market is your derivatives market, and that is many times bigger than the actual physical gold market. Now, there's a negative correlation between the US dollar and the gold price. So if gold strengthens, the US dollar weakens, and vice versa. So it's not in the interest of especially the Federal Reserve, the American Central Bank, to have appreciating gold price. So I actually just see Bitcoin and a lot of the cryptocurrencies as a decoy being used by central banks, but at some stage, I think the regulators are going to jump in, and then Bitcoin is going to have problems. And in fact, I think most of the crypto space is going to have problems. I have two graphs here. Unfortunately, I see this left-hand one, the timeline I cut off when I sized or cropped the image, but you can see that at the bottom, so this timeline here at the end, the right-hand side of this graph is actually now 2020, 21. Each time TIFA is being printed, here on the left-hand side is, I think it was the 2017 bubble with Bitcoin. So you can see there's a correlation between the printing of TIFA and the rise in the price of Bitcoin. So it's not just central banks' quantitative easing that pushes up Bitcoin. It's also the printing of these fake TIFA dollars that doesn't have a one-to-one backing with the US dollar. So it actually amplifies the bubble. If you look at this white graph on the right-hand side, currently 75% of all Bitcoin purchases is being done in TIFA, USD TIFA. So not with the actual fiat currency, not with actual pounds, yens, rands, dollars. So this is very, very concerning. Okay. Another thing that is good to know is the whole concept of counterparty risk. So we've now seen this with MTI, Mirror Trading International. So recently, not just in South Africa, in many countries, people are starting to move their Bitcoins off exchanges into, I think it's known as cold wallets, to reduce their counterparty risk. So in the case of MTI, if something goes wrong with your operations or you have someone that's crooked, I don't know the ins and the outs of MTI. I just know this is what happened with MTI is counterparty risk. So you commit an asset into someone else's hands and something goes wrong with that someone else and your asset is lost or gone. Now, counterparty risk can happen really with any financial instrument. So stock exchanges, banks, custodians, traders. Let's take banks, for example, cash. If you have a deposit at a bank, we tend to feel very safe and secure, but what you're doing in reality is you're actually making a loan to the bank. Your deposit is a loan. The bank owes you that money. So you are subject to counterparty risk. The people in Cyprus experienced this firsthand when their banks froze their money and they took a haircut. So they said everyone that has more than 100,000 euros will forfeit. In certain banks, they forfeited everything, savings over 100,000 euros. So that's counter party risks. Also in the investment industry, exchange traded funds, ETN. So exchange traded funds are supposed to be safe. So let's take gold, for example, that we have a number of these ETF products in South Africa that gold is supposedly separate from the issuing bank that issues this ETF. And it's being audited. So that might be the case. I know some people place a question mark over that. But the ETN, an exchange traded note, is a much more dangerous instrument because the bank that issues this instrument doesn't actually hold the asset. So if the bank goes under your ETN, will be affected. Um, Shares, cash, cryptos, like I said, even with gold, you can have counterparty risk. And I think MTI is just a small example, although there's people that lost a lot of money. It's just a small example of counterparty risk. But I think in the months and years ahead, this is going to become a major problem where someone who's a depositor at a bank in France all of a sudden lose their money because of a bank failing in Italy, and because of the interconnectedness of the whole financial system, they were blissfully unaware of counterparty risk. So this is going to become, I think, a major problem in the days ahead. Okay, so my last slide here just quickly speaks about gold. So like I said in slides earlier, if you want to speculate, yes, you can speculate with cryptocurrencies, but make sure you understand why you are speculating and what the upside is and what the downside is of your of the money you commit. Gold specifically is a hedge, and I think where the world economy is, this is really where one should focus. Yes, there's also a speculation element to it, and the price will probably rise tremendously, but I wouldn't, that wouldn't be my primary reason for buying gold. So if I had to compare gold and Bitcoin as a hedge, there's a very small minority of people that hold Bitcoin. Gold, on the other hand, is universally being held. You'll see that about 0.5% of all gold ever mined is held in the form of jewelry. And that's in just about every nation on the face of the earth. It's got a 5,000-year history of retaining value. So the same thing you could have bought 100 years or even 5,000 years ago with, you can buy the same with today. You can actually do quite a fascinating study in the Bible where it says what you could buy with gold and silver in terms of agricultural products or land, and do that same calculation today. You'll be surprised that the purchasing power has remained fairly similar, or even 100 years ago. If you really want to buy, let's say, a top designer suit that's handmade, an ounce of gold would do today, it would have done 100 years ago. Gold also goes into a bubble, especially in crises. So, but it always reverts back to roughly the same purchasing power. So something to consider. Central banks buy gold, but not cryptos. Why? You'll see just a little snapshot here of the 18 countries with the top gold holdings, and you'll see the Western world tends to keep their gold levels above 60%. Basically, bankrupt country like Italy, 70% of their reserves are held in gold. I think it was last year, April, the Basel III rules declared gold as a tier 1 reserve asset. So it's as good as cash. And if you hold gold in your own possession, you have zero counterparty risk. This is the great thing about gold. Many people say, no, but you can't carry bars of gold around to buy stuff. Well, it's a silly argument because it can be digitized, and it has been digitized. And then something very interesting that is starting to happen is that gold is being marked to market. So what that means is, in an accounting sense, I don't think we will ever go back to the gold standard as we had it in the past. In the past, gold would be denominated in a certain unit, like let's say $42 an ounce, and it would be kept at that value indefinitely, unless there was a war and money supply had to be increased, and they would revalue the gold. But what's starting to happen, you see this with the European Central Bank. If you look at their balance sheet, gold lies on the asset side, and currency in circulation lies on the liability side. And every quarter, they just revalue the gold. They market to market. So to say, okay, this quarter, what is the going rate for gold? And then they just adjust it on the asset side. So gold is going to take more and more the form of reserves and savings. And I think with the currency reset that's already busy happening, that at the end of the day, gold is going to go up tremendously in value. And there will be a time period where, like after this, the world wars, where, I personally know of situations and people in Germany that were able to buy 3 properties with an ounce of gold. So that just means the price went into bubble territory. It doesn't stay there forever, but I believe there will be that window of opportunity where that wealth transfer will take place. But I think the next financial system is going to be linked to gold, but not as it was in the past. So when it comes to hedging and protecting value, I think gold is invaluable. I don't personally see that being the case with Bitcoin. Speculative instrument, yes, but not a hedge. Okay, thank you, Jasper. I'm finished.